Who is holding the bag? Well, when we have 37 trillion in national debt, that means borrowed money. That means IOUs that we put out. The reason for that is we have a $28 trillion GDP, gross domestic product economy. Okay. Out of that, the Treasury receives income taxes, capital gains taxes, social security taxes, all that stuff. Just like we have a budget, we have a W-2, we get a paycheck, right? So we know what's incoming. And we also know what's outgoing because that's our spending. It's the same thing in the trillions when it comes to the federal government. So the federal government has approximately about 5 trillion coming in. Okay. Let's figure out it's a pipe of 2 inches thick. Okay. That's the incoming revenue. Again, it's from capital gains taxes, social security taxes, income taxes, obviously, corporate and individual basis. And then we create a budget and it gets approved by the legislative branch, which is the House and the Senate. And then it goes to the president for his signature, which he did with the big, beautiful bill they passed. Well, the spending on the big, beautiful bill was above 7 trillion. So if we're only bringing in 5 trillion and spending 7+ trillion, we have a budget deficit. That budget deficit has to get closed somehow. Well, how does that get closed? We issue IOUs. We borrow money from the rest of the world. So there's a 2-inch pipe that's coming in, figure out, okay, and then there's a 3-inch pipe that's going out. Well, when we do that, whatever is coming in is never going to be enough. So we go issue from short term, from weekly treasury bills, monthly treasury bills, 1 year, 2 year, 5 year, 10 year, 20 year, and 30 year. So the longer you go, the vernacular changes. They're called bonds. Anything over 20 years is called bonds. Anything less than 10 years is called notes. And anything less than a year is called bills. Well, we have to issue these. As I explained, if you have 2 trillion or 2.5 trillion budget deficit, the money has to come in and the budget has to get balanced somehow. Well, it gets balanced by borrowing. And when I said who's holding the bag, second topic I'm going to talk about today is about the US dollar, how weak it is, and the ramifications of a weak US dollar. So when these folks from the globe, US, anywhere, sovereign wealth funds, they all come and buy these notes and bonds and bills from the US Treasury. When they're issued every day, billions of dollars auctions are held. We don't hear much about it because it's done in a seamless fashion. The reason for that is not only we have to issue new debt to make up for that new 2 to 2.5 trillion in deficits, we have all these notes, bills, bonds we have issued over the last decades. So, for example, if you bought a 30-year bond from the U.S. government, right, the U.S. government has to pay interest on that. But, for example, if you bought it 30 years ago and today is your expiration, the U.S. government has to give you that money back, has to pay you that back. It's called maturity. So the bonds are maturing. And those bonds also have to get replaced because we have no other way. We can't just say, we're not going to pay you back. We're not going to default on our debt, obviously. So what the U.S. government does, not only the new issuance is coming around, you guys understand the mechanics of this, but the old bonds, notes, bills that are expiring have to be replaced by issuance as well. So what that does is that creates a lot of supply, okay? So when there is that much supply created, what happens? Demand may slacken, or the buyers of these bonds, notes, bills may require a better return. And that's what's happening. The interest rates on the new issuance is pretty high compared to what we're replacing it with. So 30 years ago, maybe that bond was sold at a 3% coupon. It's called a coupon, the interest rate. And today it's going to be at 5%. So what happens when we issue it at 5%? we issue it at 5 to satisfy the buyers of these, but then our interest servicing costs are going higher. Okay. So when I say who's holding the bag, it's proper. Who is holding the bag? Let's talk a little bit about that. So foreigners own more US stocks and debt than ever. Investors from overseas now own 18 trillion of the US equity market. They also hold 15 trillion in US debt securities. Let me repeat that again. Investors are from foreign overseas entities now own 18 trillion of US equities, and they hold 15 trillion in US debt securities, which are the bonds, notes, and bills. They own 20% of the total equity market and 30% of the Treasury and corporate credit markets. This is into the trillions, folks. Do you guys see what's happening to this chart underneath? You guys see how that line just keeps going from the lower left to the upper right? Well, there are reasons for that. The reason for that is the foreign entities, the foreigners, have to kind of buy that. The reason for that is that the US dollar is still the reserve currency on the planet. Almost every trade, every transaction is done in US dollars, and they need those US dollars, so they buy those bonds, notes, bills, and stocks. And we know what's been going on in the US stock market over the last 3 years since the bear market ended in 2022. Well, there you go. The foreigners are holding the debt. Now, when and if we get a sell-off, will they be forced to liquidate, or are they going to hold? Right? Because all this money coming in, that's one of the reasons, by the way, the stock market, gold market, Bitcoin, Ethereum, all these hard assets, real estate are at all-time highs because there's constantly money coming in. The only problem that I see with that is what happens on a sell-off. Will they be forced to sell? If they're leveraged, absolutely. And some of them are. But when I say who's holding the bag, the foreigners are holding the biggest bag. But because the US dollar is the reserve currency of the planet, we're easily satisfying that demand, with the exception that our interest costs on this borrowing is gone through the roof, out of control. I'll talk more about that on Wednesday with the fresh numbers. As of this year, the interest cost only, just the interest cost, is going to be $1.2 trillion. Now, can we take that 1.2 trillion and use it properly in this country? Of course, but the only way that's going to happen is put our fiscal house in order so the monetary policy can follow a proper fiscal policy, which is a balanced budget. If we don't have a balanced budget, and for the foreseeable future, as far as the eye can see, I don't see one, we're going to have to borrow. And when we borrow, see, what happens is that we're putting more and more of our future in foreigners' hands. Now, what could they do? They could come and sell these bonds, because you don't have to hold this to maturity. You can sell it anytime you want. What if they came and sold those bonds? Now, that's going to create more supply on top of the supply that we're putting out to cover those deficits. Well, interest rates will shoot up. And that's why I talk quite often about the Federal Reserve not having any control over the interest rate market. Yes, President Trump and the administration is yelling at Powell, saying, cut the rates, cut the rates, cut the rates. Well, we can cut the rates all we want. We have cut the rates, 100 basis points. But since then, the global bond market and the US Treasury bond market has gone the other direction. Because what is happening is that the Chinese are selling US Treasuries. Japanese are selling US Treasuries. Actually, Japanese are the largest holders, and right behind the EU and UK, and China used to be number one. They're down to number 3 now. Well, they still hold billions, trillions of dollars worth of notes and bonds. Well, they can come sell those. When they sell those, it creates additional supply. It could spike interest rates up. When interest rates spike, so basically we have our destiny in their hands by issuing all these notes, bonds, and bills. Is it a good thing? Of course not. Why should they be controlling our future? But if you live by borrowing and spending, there is no other choice. Who else is going to buy those bonds, right? Now, the Treasury themselves buy those bonds, believe it or not. What they do is they print money on one side and they come and buy these bonds to support the market. It's a racket. I understand it. Basically, you're getting high on your own stuff, but look, the system is so large these days into these trillions and trillions of dollars that we have to do this. We cannot stop the musical chairs at this point. Because every time we have a crisis, when we had a crisis in 2008, it only cost the taxpayers $800 billion. It's called TARP, Toxic Asset Repurchase Program, to clean that mess up. Well, that mess got cleaned up, and then COVID showed up. During COVID, it was a black swan event. Nobody was expecting it. And then we had to pump in $7 trillion into the economy. That's why these deficits keep going higher. And when we do pump it, okay, and every 12, 15 years, there's some sort of black swan event that takes place. Okay, how much do we need to spend on the next black swan event? Well, how much can we do that? Is it going to be 15 trillion, 20 trillion? Now you guys understand the correlation between all this money getting printed and pushed into the system and why these asset classes like the stock market, gold and Bitcoin and Ethereum now, real estate, all these asset classes, hard asset classes, keep going higher and higher and higher because all this money is pushed into the system, and that money has to look for a return, and then it goes into it. And that's what the foreigners are doing as well. Foreigners owning this much of our future is not funny and it's not good for anyone, but then we're in a box. We have to do what we have to do. So yeah, I hope I was able to explain this to you guys because it's an important issue. Who's holding the bag?